If you've been debating whether or not to buy a house or keep renting, you're not alone. With home prices at record highs, affordability at record lows, this might be the toughest time in history to make that decision. So, is renting really just throwing money away, or is owning a financial trap? Let's take a minute here and break it down, Josh.
We talk about some important things on the show. One of our fundamental beliefs is that numbers never lie. And numbers don't lie. But this is a super interesting area in that anytime we talk about the inconvenient truth that homeowners have 40 times greater net worth than renters, and 50% of that net worth is in home equity. So before you say it, troll, correlation does not equal causation, but when something leads to something and 50% of that is in that asset, there's a high correlation there that does lead to a level of causation, although not complete. So we're going to go through those numbers today. What the genesis of this conversation is, I sent Jeb an article that came up in my Substack from someone, and they are the poster child for the people who go down this path that says, never own, renting is absolutely the way to go. So again, the numbers don't lie, but the numbers involve some heavy assumptions when you're going through this. And we're going to go through that. We're going to talk about the numbers where you can show that if you're a spectacularly disciplined person, that you could rent a home and invest the difference and come out ahead.
Josh, it's really easy on paper to make the numbers work in favor of whichever way you want it to work.
Whichever way. Both of them can be manipulated heavily to
Correct.
show this is the obvious answer.
Correct. And if we're being honest, at the moment, the answer is not quite as clear, right? There's a lot of mud in the water. Again, prices are high, rates are high, affordability is low. It's a more difficult question now than it was in 2011, 2012, before home prices skyrocketed. Also, before the pandemic, right? This was a different conversation than the one we're having now. So the goal here really isn't, it's not to push you to buy a house. It's not to tell you not to buy a house. It's really breaking down some of the misconceptions around the argument, laying out the facts, going over some examples, and ultimately putting the ball in your court to figure out whether or not it actually makes sense.
Let's start, Jeb, by just going through the simple math of what the proponents of renting and not owning will tell you. Say, if you go to buy a house, I didn't want to make a super numbers heavy episode. So I went through an example in great detail in a spreadsheet, hard to cover in a podcast, but here's sort of the takeaways. So I used an example, Jeb, of a real property in Savannah, Georgia. It's $425,000. When we add up everything included in owning that home, including maintenance, upkeep, all of those things, it was about $3,600 a month to own that home with a 5% down payment. To rent in Savannah, very similar homes. I looked, the range is anywhere from $2,100 for not so nice ones, $2,400 for really nice ones. So call it $2,300. It's $1,200, $1,300 a month difference. So what people will tell you is, hey, the 5% you put down on that, $20-something thousand, another $10,000 in closing costs, you got $30,000 lump sum to invest, and you got $1,200 a month to invest. That will come out ahead, far ahead over time if you invest it versus making that sacrifice of $1,300 a month of spendable cash to own a home. But there's some pretty big assumptions that underlie that. The biggest one that almost everyone makes, not necessarily, again, I use engineers. I'm not saying engineers in a negative, pejorative sense here. Engineers, I have a buddy who's an engineer. He's great with stuff like this. He can pull out the spreadsheet and it is accurate to the penny. He's not trying to tell a story on YouTube. He's trying to get to an answer of what is factual. So the important part is most people who are trying to say, I rent because it's better, I'm going to come out wealthier over the long haul, will say, I save $1,300 a month. So $1,300 a month over the next 30 years at 8% return, I'm millions of miles ahead. The most important thing in that equation that is not accounted for, I guess there's two of them there, Jeb. The first is that rent is not fixed. Rent goes up at about 3% over the long haul, but it's heavily related to inflation, right around the rate of inflation. Hasn't gone much above it, hasn't gone much below it for the last 40 or 50 years. So whether inflation is high or low, rent increases are generally going to go higher or lower. So in a relatively short period of time, we're talking a 50% difference there in the monthly payment. So to see a 50% change at 3%, really, we're talking 10, 12 years. So in your best case scenario, you have 10 or 12 years of diminishing difference between the current rent and the current mortgage payment. On top of that, the one that no one ever wants to acknowledge, but we have to acknowledge in times like now when rates are elevated. So not to say that rates are not going to stay in this range, it's 6.5% to 7.5%, may be the new normal going forward. But we will have a recession. We will have periods. We will have a refinance boom. And the people that buy at 7, they have an option to drop. They've fixed that housing payment, not the taxes and insurance, but they fixed the principal and interest with the option for that to decrease for them over time. So when we look at that, you have to account for both of those, that you maybe have 10 to 12 years as a renter of some savings there that you can save and invest. And then the other piece of it is that you also have to look at the owner is probably going to drop that payment $300 to $500 a month over the next somewhere in the next 5 to 10 years, which shortens that. So you have 5 to 7, 8, 9, 12 years at the most that you have any monthly savings there. And that's important to note.
Well, I think it's also important to note that the earlier you can do this in your life, the better off you're going to be long term. Now, I know, the average age at the moment, Josh, first time home buyer is 38. Back, I forget what the stat was exactly, but I think it was like 10, 15 years ago. The average was like 28. It's jumped considerably in a short period of time. And it's has to do with where you are in your life, right? Not having the financial stability, the security, the money for the down payment, all of those things earlier in your life. And so, but going back to what I was saying, the earlier you can do this, the earlier you can fix that principal and interest part of your housing payment, the better off you're going to be long term. Because if you're able to refinance and take that down, the less it becomes of your overall budget. And so, there's always the argument, and unfortunately, the argument for most people when they're saying it's better to rent, they're only looking at now. They're not looking 5, 10, 15 years down the road. And it's hard to do that. It's hard to do that with anything, Josh. It's hard to have, we've talked oftentimes, if you don't have a plan, then essentially any road you take is going to get you to where you're going, right? And so by having something long term to focus on, you're accomplishing this goal that you don't realize you're accomplishing, right? Take me, for example, going back to 2012 when we bought the house that that my wife and I originally bought together. It was not about where that house was going to be in 5, 10 years down the road. It was, does the payment make sense to us now? Can we afford it? What is the plan with kids and all of those things? And now we look up 12 years later and the house has gone up 3 times. Now, is that always going to happen? No, it's not always going to happen. But we do know with inflation, 2 to 3%, 3.3 today, depending on what you're looking at, homes are going to more or less go at that same rate. And so that's the kind of the mindset that you have to start thinking when you're kind of weighing these pros and cons. Now, Josh, what about the argument of the stock market, right? We have that, the people out there that's saying, hey, listen, if you just put that money that you're going to invest in a house into the stock market, then essentially long term, you're going to have the same benefits, if not more. And you're not going to be locked into a house and have to pay maintenance and all these other things on the side of ownership. What are your thoughts on that?
It ignores human nature on several fronts. Okay. And these numbers are going to be a little bit different. Most of you listening are first time buyers. You're looking at 3%, 5%, 10% down. Some of you are looking at 20, but we're not talking a move up buyer with 50, 60, 70% down. Jeb, if you had decided that I wanted to rent, you had a giant chunk of money that you could invest straight away. That changes the calculus of this. But the thing that we have to look at is we're talking for that example of this property in Savannah, Georgia, I think it was about $34,000 to invest lump sum, and then about $1,200 monthly.
And just go back on where that $35,000 that you're talking about is coming from.
5% down payment on 425 plus 2.5% for closing costs. So it puts you at about 35,000 lump sum that if you could do that and buy, you could also invest that straight away. And then you got about $1,200 a month in the first few months before you get to the annual rent increases that you could invest. But you got to ask yourself, am I that person? Am I incredibly disciplined? Or am I like most Americans, Josh and Jeb included, that your lifestyle expands to fit your budget? If you have an extra $1,200 a month, is that going to go straight into the Schwab or Fidelity or Robinhood account and get invested? So the first thing is, does it get where it's supposed to go? Does it get invested? The answer for most people is no. The vast majority. I'm not saying this is 60-40. It's not 50-50. This is like 90% of people. Going back to that example of engineers, why are engineers really good at this? They're good with numbers. They can pencil it out. They're utilitarian. They're functional. They're disciplined. So that if you're that type of mindset and you're utilitarian, you don't say, hey, I want a beautiful HGTV looking home. I want a roof over my head that's clean and safe. And I want as much money as I can to invest because I can watch it grow. Now you start saying, maybe I am the person who renting and investing is the right route to go for. The second question then becomes, the vast majority of investors underperform the market. We can say over the last 30 years, the S&P's done about 10%. The vast majority of investors do worse than that. When the market's down 20%, they pull their money out. They already took the 20% loss, but they don't come back in until the market has got its head back above water, and they miss those early gains. So are you a successful investor? Do you have a strategy, a plan, a money advisor that you trust that has a plan that he can take that discipline on for you? He or she, I was being sexist there, Jeb. He or she can take that discipline on for you because you probably don't have it. That's the reality. You probably don't have it. You don't have the discipline to save it. You don't have the skill and discipline to invest it. So again, it looks great on a spreadsheet. This is an area where it tips the scales in favor of homeownership. You don't have an option if you want to put that roof over your head of not making the payment next month. And that payment includes forced savings. Some of that money is going into principal pay down, and it is small in the early years and it's huge in the late years. I get this one all the time. People go, oh, you're paying just all interest in the early going. And that anyone making this argument always falls back on that. I'm like, I don't know about you, but let's say it's $300 a month. That's $3,600 saved for putting a roof over my head. So really that $1,200 difference was about $900. And if you're buying more expensive homes, it can be $1,000. It can be $1,200, $1,500 the first year, a month. So don't downplay that. That's real money. Most people don't save $3,600 a year. So if you have that for putting a roof over your head, it's something in your favor. We also are not talking here about leverage. The reason why homeownership comes out ahead is you're looking at putting 3 or 5% down, 10% down. So you're talking 33, 20, or 10 times leverage on a $400,000 asset. People want to say, well, the S&P's been up 10, home prices have been up 5%. Real estate's a bad investment. Well, okay. How many people run out and take the $425,000 they could have bought stocks or ETFs or bonds or whatever with? How many have that and decided to buy a house cash? Not very many. You're probably not listening to this show if you're that person. So you don't have $425,000, but you can get it because if you can qualify with good credit and you can get it at really good terms, and you've now controlled all of that asset. So let's use the 5% down example. And that's 20x leverage. So the first year, if it goes up 5%, that's the long-term average, sometimes more, sometimes less, sometimes a lot less. But if it goes up 5%, 20 times, you just literally doubled your money in 1 year. And the answer then comes, the flip side of that argument, well, if you want to sell, you got 6 or 7% costs. Yep, that's true. That's why we say you're not going to buy or sell in the first year or 2 or 3 or 4 or 5. In running the numbers, I penciled it out in my spreadsheet at 5 years, 10 years, 15 years, 20, and 30. First 5 to 7 years, if you don't have a 5 to 7 year time horizon, the spreadsheet jockeys are 100% correct. Rent and save aggressively because you need time on your side. With affordability where it is at and rents being pretty heavily discounted in the current market to where home ownership is with a minimum down, those are the things that you have to look at. The impact of leverage, because you're probably not going to be using leverage if you invest your $30,000 and your $1,200 monthly savings. You're going to put it in the market and you're going to get 10% on $30,000. If you buy a $425,000 house, you're going to get 4 or 5% on $425,000. You get to control the entire asset.
So there's two things that came up, Josh, when you were talking, and a lot of it has to do with the natural human nature of people. If people had the ability to do the savings that we're talking about here, the $1,200 a month, the whatever a month, most of them are going to have more than a 3 or 5% down payment because they've been doing it for a period of time. This isn't something that you just start doing once you become a homeowner. If you're not doing it before, chances are you don't have the discipline to do it afterwards. And this is not a dig on anyone. This is the reality. This is me. This is Josh. This is people that, like Josh said, your lifestyle adjusts to the amount of money you make. It does. And it can be, I'm really good sometimes at transferring money from my business account, my personal account into an investment account. Other months, I'm not so good, right? Things come up, just different things happen in life. And you're like, well, I missed 4 or 5 months there and went by, and hell, I completely forgot, or whatever reason. So the discipline's one thing. Also, Josh, how many people refinance, pull cash out, pay off debt, and then 3 to 5 years later, maybe not even 3 to 5 years, 12 months, 18 months, are calling again to refinance again, to pull additional cash out because the debt they paid off is now back up, right? So it is that ability. So if you have that ability to save money, put it away, and literally let it compound, then this is a little bit different story than the person that is, doesn't necessarily have the discipline. That's one of the benefits of home ownership, is it creates this discipline for you, because you do have to have a roof over your head, right? The other option is you choose to live with mom and dad or Aunt Susie or whoever it is, or, you're paying rent somewhere. And so if you're choosing to rent, then you're paying something somewhere. And that's what you have to think about. It's either a roof over your head where, I don't want to say paying your landlord's mortgage, because I kind of hate that statement, because it is very negative. But the reality is, owning a home gives you some of the benefits that landlord is capturing by having you rent.
Jib, I'm not saying this to scare anyone, but what I want to go back to is I had a version of the spreadsheet that I'd put together. I said, let's stack the deck and say everything goes right for the renter in that situation of a $425,000 purchase with 5% down. And they ended up, when I completely stacked the odds, with about $1 million more. The owner had like $1 million in equity, 30 years, $1 million in equity. And the person saving and investing had about $2 million. Well, do yourself a net present value calculation, because the rents for that $2,200, $2,300, $2,400 a month rent house in 30 years is going to be about $6,000. The owner of that home should have extinguished their mortgage if they managed it properly, didn't do cash out refis, didn't refi for a new 30-year every 5 years and get stuck there. So if you've managed this properly, you only have your taxes and insurance, and that additional $1 million needs to generate for that person $72,000 a year. It needs a 7.2% rate of return just to pay for the rent. Now, again, not apples to apples, not fair, because in that situation, if you did that, you don't have taxes and insurance, and that homeowner does still have their taxes and insurance. So maybe they're paying $1,000, $1,200, $1,500. But any way you cut it, it's 25%, 20% of what the renter is paying. So for me and most people, that's their big fear, is I get to retirement age and I can't retire because now rents are just extraordinary. So either I got to move out into the woods in a small manufactured home in the area I don't want to live in, or I don't have the budget to make this happen. So when I was running through the numbers, here's the things that I was struck by, Jeb. You're probably not the person that the spreadsheet works out for. Does that mean, hey, run out and buy a house? No, not at all. Like you just said, Jeb, you need to be saving, investing, getting good credit, all those things that say that you're ready. But what I would say is, if you're the person who's asking yourself this, if you're looking at videos and going, I agree with that, I see the spreadsheet, you're not someone who's decided to own. You may be someone who doesn't value ownership in the same way.
And that's okay.
It's okay. We talk about this. 2 out of every 3 American households own at any given time. So most people want to own a home, but not everyone, for different reasons. So not owning is okay. And the spreadsheet that we're talking about, the comparison of rent versus own, is critically important for you if you decide not to own, because you need to have a bigger nest egg at the end, and you need to accept that you're not going to have a lot of the sort of squishy emotional benefits of home ownership. And for a lot of people, they don't care. They truly don't care, or they even prefer the benefits of flexibility, of being able to pick up stakes and move, of moving every couple of years to a new place, novelty. They benefit that. They value that more than the benefits of home ownership. So what I was going to say is, the big one that I look at is, we are in a market where if you are not committed to homeownership and feeling like you have the ability to have a 5+ year time horizon, I would like to see 7 to 10 years for you. Hopefully things work out. You build up equity and things go great and you've got a better job. You get married, you have some kids, you buy the dream home. But if it doesn't, we need to be buying something that we're comfortable with and having a 5 to 7 year time horizon.
No, with that, Josh, let's take a minute here and just not regress, but kind of talk about some of the things that are coming from the crowd that tells you not to buy a house, that says you should rent, that renting's always the answer, right? There's never an absolute. Buying a home is never the right answer for everyone, and renting is never the right answer for everyone. There's some in between, right? There's the bell curve, and I think the majority of the people kind of fit in the middle of that bell curve, where most people should do it, and most people want to do it. But let's talk about the idea of a house being a liability. You're just going to be rent poor, that maintenance items are things that are the one factor that no one talks about, that you should absolutely rent because your landlord's going to take care of everything. Let's make some sense out of this stuff, because there's some valid arguments out there with some of it, valid in the sense that sometimes it makes sense. Most of the time I'm saying it doesn't, but let's see what you have.
So in those numbers that I was running, Jeb, we were including 0.75% of the home's value for maintenance and expenses. In my experience, that's excessive. And it may be because where we live, a lot of the value is in the land. So the structure isn't worth that much more than a home in Savannah, Georgia, but the land sure is. So if I go with a 1% of the value, it's a huge number, but my little house isn't any more to maintain than it would be in Georgia or Connecticut or North Carolina or wherever you want to go. So in my experience, it's excessive. So if you're buying a $400,000 house, are you going to have $3,000 a year of maintenance? You sure could. Is it likely to happen every year? Probably not. But you do need to account for it. What does it tell us? It tells us that the people who would like to get into a home and they've scraped up enough dollars, they got their credit score above 621, but they're going to use every last nickel and they have nothing to fall back on. It's probably not the right market to do that. If someone told me they wanted to do that in 2021, pretty comfortable with it because they were going to have multiple bailouts. Right now, it's not that market. So from that perspective, I would be careful. I would want to have more reserves. I would not want to max my debt to income ratio. If we're deciding between two options, maybe it says I do a 5% down instead of a 3.5% down FHA. There's multiple things there that you have to decide, but most of us don't have to think too hard about this. You're inclined one way or the other. So feel free to research the other side. We've talked about this. We all have our biases. And one of those biases, I'm biased towards buying a home. I'm biased towards renting. If you feel that way, but you're enough in the middle that you're wanting to research it, look at the other side of it and what that is. Because again, this is what I always fall back to. We're going to trigger some people here. Anyone that made it this far in the video, they're going to lose their mind because when we talk about this, it makes them so mad. The experiment has been done. 2/3 of Americans at any given time choose to own their home. 40 times greater net worth. 50% of it is in home equity. It works because it takes those decisions and the discipline. You don't got to decide where to invest. You don't have to remember to put the money in the account every day. All you got to do is pay your mortgage. And to be honest with you, Jeb, I've got a client right now I got to get back to that they want to sell and move to their new home. They have done no maintenance in 15 years.
I want to talk about that.
So can you? I wouldn't suggest it. I wouldn't advise it. I wouldn't want to live in a home. I would rather rent a well-maintained home than live in a house that I didn't maintain. But it is an option, and some people choose to do that. So it's a complex decision. There's not a right answer. What I've always said and will continue to say is for the vast majority of people over the long haul, home ownership is the right decision. That doesn't mean it's the right decision today. So if you're deciding not to own and rent, do all of the things that they say that renters can get ahead, and then someday become a homeowner and hopefully buy beneath your means. So you're still maxing your 401k, putting some money in a Roth IRA, doing all of these things. The answer isn't either or. The answer is do all of the things and do what feels right to you.
Yeah, I mean, you brought up a point there that I was going to touch on. Is I've sold 2 homes within the last, we'll just say year, because one was May last year and one just closed now, so February, last 10 months. And neither of them have had much done on them in the entire time that they've owned the property. Now, one, the lady's lived in there 30 plus years. The other one, 12, 15 years. and both have gone up considerably in value to the point where even though there's a ton of deferred maintenance, they're still getting a heck of a return on this deal. Like, one lady bought it for under 100,000, sold it for 1.1 million. She made $1 million. I mean, what are we talking about here? So could she have made that in the stock market? Potentially, but it's a different course of action. She had to have a place to live. Remember that you have to have a roof over your head, Josh. So we're not saying that there's no risk in owning a home, but I'm also telling you it's not risk-free renting either, right? There's risk that is involved with your landlord wanting to sell their property. Now you've got to go out and move. Guess who pays moving costs? Your landlord's not paying that. You now are responsible for that cost. Guess what happens if the rent gets too high? You want to move. You're responsible for that. So all of these things are factored in, and that's what no one talks about. They only talk about the perfect scenario where rent stays the same forever, and you're investing and you're getting these super high returns. Again, we can skew this in either direction, and it's not about that. It's about making you decide, or not making you decide, helping you decide as a homeowner, what are the pros and cons, right? If you're somebody, again, that thinks, this isn't to convince you, you're probably not a homeowner. And on the flip side, if homeownership is the absolute way to go, then you should probably just step back and understand that there's a little bit more to it as well. And I think if you're doing that, then you are the educated home buyer. That's the person that we're really trying to get to here, Josh. So last thing I guess to touch on in the video is if you're somebody that's kind of in that in between at the moment, not even in the between, you want to become a homeowner. What are you working on right now to kind of get you to those next steps?
Well, so what are the things we talked about? You want to get the best financing available. So it involves maximizing your income, involves maximizing your credit score. Whether you use it for a down payment or just reserves, maximizing your savings. So the things that the renter is saying they're going to do is, I'm renting, I'm going to max my savings and invest. You should be doing that now. I like to see people with reserves, even if it's in a 401k. In an emergency, you can tap a 401k. So it's not as liquid, which is a good thing for most people for long-term savings, but it is usable. So earn, save, invest. And maybe at some point that investment becomes a house when it is right for you. Earn, save, invest, know your timeline, know your time frames. Am I likely to move? Am I likely to get divorced? Am I likely to get engaged? Am I likely to have a kid? Although any and all of those things can come as surprises, hopefully you're planning for them and preparing. Those are the things that you need to be thinking of. Think of the roadmap for your life. Not that it's not going to change and adjust and take you in many different directions than you originally anticipated, but at least have a map of where you're starting. If you take a detour off of Route 66 and you want to head out to Pahrump, you're going to question your life decisions when you get there, but maybe it sounded like an adventure on the way. But if you didn't at least have a plan on the roadmap, you're never getting anywhere.
Well, and if you think you're in that position where you're ready to start the process, go to theeducatedhomebuyer.com/start. Josh and the team here can walk you through the pre-approval process. Once you get through there, we can get you connected with a real estate agent, hopefully myself, and guide you through that process. But if you found any value in today's video, do us a favor, hit the thumbs up, subscribe to the channel for more content like this. But until next time, adios.
Amigos.